If you are into money markets, you must have come across arbitrage funds, but ever wondered what these funds are? Well, today we will help you decode that these funds are, and most importantly, we will help you decide if you should hold on to your arbitrage funds or should you be investing in one. Let's bring on board our guest Shweta Jain of Investography. Shweta, good evening and welcome to the show. Arbitrage fund, it sounds complicated, but then I'm sure you're going to break this down to our viewers and explain as to how and when an investor should be having this kind of a fund in their portfolio. But then before that, what are arbitrage funds?
Hi, Kavita. Thanks for having me on the show. So, arbitrage funds, yes, like you said, it sounds a little complicated, but the name actually symbolifies what it actually is. It is the strategy of buying and selling the same stock. You buy it today and you sell it in the futures market. So, to that extent, the risk is less because you're taking advantage of the difference that is there in the current market and the future market. So there is an opportunity here that you can buy today and sell in the future today itself at a predetermined price. So that is what arbitrage funds take advantage of.
What kind of funds are available in this category? And if this is the typical work that a fund manager needs to do, the fund manager really needs to be very sharp and the timing has to be very right, which for an investor to understand could be tricky. How do we pick up an arbitrage fund for us?
So you have to understand that arbitrage funds actually work better in times when markets are quite volatile and not necessarily, moving in one direction or kind of steady. So what we are looking at in the future, like how we're looking at markets today, markets are at all-time highs. People are getting antsy about what the future holds. So now is actually a good time to look at arbitrage funds. The kind of people that you should be looking at arbitrage funds are people who will want a little higher returns than an FD and don't mind that additional risk that comes with it for that additional return. So when I'm buying a stock today and selling in the future at a predetermined price for a premium, right? So even if the stock falls, and I sell it at a loss, but I have still made up for it in the futures market already. And part of my portfolio in the arbitrage fund is also invested in debt, predominantly equity and equity related options, but with lesser risk. And the advantage here is that you get equity taxation. So more than 65% has to be invested in equity and related assets. The rest is invested in liquid options. So making sure that your return is not just from the equity portion, but also from the debt portion that the fund manager manages. So yes, the fund manager has to be smart to understand what opportunities are there and which he can take advantage of, where it's more volatile, and which has better spread and more opportunities.
But then, Shweta, talking about an investor's financial portfolio, how much of an exposure you think can be given to an arbitrage fund?
So I would recommend anywhere between 10 to 20% in an arbitrage fund, not more, because of the simple fact that you're looking at slightly higher risk than an FD and slightly higher returns, but it's not going to give you great returns. So if your time horizon is 1 to 2 years, arbitrage funds will suit you. But if your time horizon is beyond 2 years, I would recommend there are other asset classes and other products that are better suited.
So, Shweta, any other category which can come in comparison with arbitrage fund and that could be a better bet for the investor?
So when you're looking at slightly longer duration, I would look at like a balanced advantage fund or anything in the hybrid category, so that you make that slightly higher return, taking that higher risk because your time horizon is more. So for anything more than 2 years, I would recommend a hybrid option like a balanced advantage fund. So maybe 2 to 4 years could be a balanced advantage fund kind of an option. Beyond 4 years, I would definitely recommend equity.
So that was a bit about arbitrage fund that we discussed in detail. And Shweta, now let's go ahead and talk to our viewers who are on call and have their financial portfolio ready with them to be checked by you. We have Akshay on the phone line. Akshay, hi. Good evening. How are you? Where are you calling from? What do you do? Please tell us something about yourself.
Yeah, so I currently live in Nagpur, and I'm
Okay.
working basically I'm having a work from home job, and
Oh,
I'm into
that's
sales
nice. Where
currently.
people are just winding up with that, you're still having work from home. That's awesome. How does it feel continuing where everyone is going to work?
Well, in terms of savings, actually, I'm one of the lucky guys, so I have
Uh-huh.
more money with me comparatively. But yeah, so it really feels great because in commuting we also put much more money. So
Exactly.
yeah,
I'm
it
very
feels
happy
great to
to
be
hear
working
that
from
you have your savings have gone up and you have called up the 80 Money Show and you want to invest that money also. That's the perfect thought. So you've been
yeah.
investing in mutual funds?
Yeah, so since October actually this year, so like since last month, I have been putting like 10,000 from my salary since it's my first job, so I don't have much salary. So
Congratulations
I'm
for
just
the first job, and I'm very happy to hear that in your first job you've started investing and you are going through the
yeah,
mutual fund route. That's fine. That's
yeah.
perfect.
So thank you so much, firstly. And but actually, I have been trying to do that in part ways, so
Sure.
just in order to be safe. Yeah. So my portfolio is like Tata Digital India Fund, SBI Technology Ops Fund, SBI Magnum Mid Cap Fund, and SBI Small Cap and Axis Blue Chip. So I have invested 2,000 per fund.
Each. Okay. Any
Yeah.
reason why you have three SBI funds?
Uh, just when so previously I didn't have job. So let's say in starting of the year, I could actually understand that SBI got a good hike. I mean, of course, I didn't have that much of a market knowledge, so I thought of putting in SBI.
Okay.
Yeah.
Okay, and so these funds that you have started investing into, is this through your own research or you've consulted a professional financial planner?
No, it's my own research. Usually now, as you know, there are many finance podcasts or
Yeah,
influencers.
definitely.
Yeah, so through that, I just thought of being on a medium risk appetite, so I don't lose much money. Uh, Even though the profits are minimal, but I don't really want it to be on the losing side. So I thought of investing in these funds. Yeah.
It's very nice to gain knowledge on your investments. There's a lot of information available online, but then please filter it out and take it from SEBI registered advisors so that you don't go the wrong way. But thank you
Of
so
course.
much. You've sent us your question, and we have Shweta who's going to look up into your portfolio and your funds. One, Akshay, I wanted to understand, are you planning to hold long in this portfolio?
Yeah, so basically I'm eyeing a corpus of around 50 lakhs in 15 years.
50 lakhs in
So,
50 years.
no, 15 years.
15 years.
Yeah. So I'm thinking of like having a good amount for my house, basically,
Have you
for
counted
my
it
own home.
inflation after 15 years? Will 50 lakhs be enough for you?
Not really, but this is not the only investment route for me. So I'm just thinking of I'm just taking like 50 lakhs from this
Okay.
particular
All right.
sector of my
So one
investment.
part
Yeah,
of your requirement comes in
exactly,
from here. Got it. Okay. Shweta,
exactly.
over to you.
Okay, congratulations, actually, on your job, of course, and making sure that you've started this investment journey. So you're actually on the perfect track because 10,000 per month for 15 years at about 12% will get you to that elusive number of 50 lakhs, the target that you have. So you will get there if you get a 12% return and you consistently invest. I would definitely urge you to invest more when you can so that you reach even higher numbers, not just in these funds, but wherever you're looking at investments. The portfolio, as I see it, is kind of skewed towards technology. And that's something that actually is anti what you said now, that you're on medium risk and that you don't want it to be very volatile or fall much. So I would actually recommend that you look at index funds rather than thematic funds, because I'm not a fan of thematic funds for exactly this reason. They can be very, very volatile, and you need to time the entry and exit right. You need to get them both right, which I'm not a fan of because we hardly get them right. If you invest in index funds, you can be rest assured that your funds will track the index, and it's sort of steady. It's not very volatile. You can do like a Nifty 50, which I think gives you a decent exposure to all of these sectors. And it also serves that purpose of not too much of fall, which you spoke about. Listening to podcasts and reading is great. I think continue to do that, but do make sure that you're reviewing your portfolio regularly to make sure what you're learning and what you're applying is in line with what you really want to do ahead.
All right, all the best with your portfolio, Akshay. We have Shrisha online. Hi, good evening.
Hi, good evening.
How are you?
Yeah, I'm doing good.
Thank you so much for sending us
Thank you
your
for the
query,
call.
Shrisha. Please tell us something about yourself. What do you do? Are you in a job right now?
Yeah, I'm working as a software engineer.
Okay.
Recently, I started investing in mutual funds.
All right. I can see you have invested in 4 mutual funds. You have,
Actually, I have invested in 8.
sorry,
I have invested in 8,
in 8.
all are index funds. Yeah.
8 mutual funds. Okay. I just have 4 in front of me. Could you please tell me the other 4?
I don't know which ones you have in
So I
front of you.
have
So
Canara
generally,
Robeco
I
Blue
have
Chip
like
and Small Cap and Quant Tax Plan and Mirror Asset Tax Saver. Which are the other 4?
I have the Axis Mid Cap
Okay.
and one more thing. But I think I have.
Parag Parekh, which one? Is there an audio issue?
Canara Robeco Blue Chip Equity Fund, Axis Blue Fund Direct Plan Growth, Parag Parekh. Then again, Canara Robeco Small Cap Fund.
Okay, so Axis Blue Chip, Axis
Axis
Mid
Mid
Cap,
Cap.
Parag Parekh, which one did you say?
The Flexi Cap Fund.
Okay, and you've recently started investing in these funds. Total amount is 11,000 SIP, right?
Per month, yes.
Per month. All right.
In everything together, not in just one mutual fund.
Yeah,
but
yeah,
in everything
sure.
together, I'm putting 11K.
Okay, so you have a medium risk appetite, and when you talk about good corpus, before 50, how can one quantify that? What is your idea?
Actually, the thing I'm more interested in is how to follow up on these mutual. Like, I want to have like a small idea on what should be my exit strategy. Like, more concerned
Sure.
about when should I exit.
All right, so we will guide you with your portfolio since now we've got all the information, and we'll tell you which funds to stick to, and we'll also tell you how much will be the approximate amount if you keep investing this till the age of 50, how much will be the approximate corpus that you would be collecting, and then you could decide if that is a good corpus for you or not. Shweta.
Okay.
Yeah, hi. So yes, we have some of your funds here. So I'm just going to recommend that you stick to about 4 funds, not more. Even 4 is on the higher side, I feel, for your portfolio. But 4 funds should be it, not more than that. So you can continue with either the large cap ones, because I do feel that, when investors are new and young, they do have the time horizon, but they don't have that experience lacking. So you might get a little worried when it gets volatile. And trust me, it looks like it will get volatile in the next couple of years or so. So you make sure that you stick to your investments. That's the first thing. 11,000 per month till you're 50 will get about 1.5 crores for you if we are assuming a 12% return, which I think is something that you can look to. You can look at even increasing the regular investments, because that's something that as your income grows, you should look at investing slightly more. I would avoid small cap for now if you're going to be worried about volatility, but because your time horizon is long, you can stick to small cap as well. So the Axis Mid Cap, the Canada Robeco Small Cap are good funds for you to sort of keep. But like I said, it depends on your temperament and what you want. I would definitely say stick to 4 funds, not more than that. And if you're looking at an index fund, I think your costs might come down further, which adds up to returns in the long run. And instead of the large cap funds, you can do the index fund. So I really want you to sort of consolidate this to 4 funds and Ideally, one index, one mid cap, one small cap, and you can keep the Parik Flexi Cap as well. I hope that helps.
So, Shrisha, are you there on the line with us? Do you want to ask anything else to Shweta? If you want to
Yes.
increase your investment amount, do you need a new fund or anything of that sort?
Is there any fund that I should keep? Like, I should get rid of some funds, but any heads up on which fund would be?
Sure. Okay. So, which fund should make an exit, Shweta, and which fund should she be invested in?
So I don't know about the tax implications, so you will have to look into that. But I would then say maybe don't continue on the blue chip funds, both I think Axis and Canara Robeco. You can keep the small cap fund. You can keep one tax saver fund if you're looking at that for tax saving purposes. So Mirae Asset can be a fund that you keep. You can keep the Axis mid cap, and I would then say UTI Nifty 50 is something that you should do. The rest you can exit or you can stay invested. You don't have to keep adding on to them, and you can exit them when you feel the tax is fine. So if it's today, you see that it's long term and your tax saving schemes 3 years is complete, then you can exit those.
All right. Thank you so much, Shrisha, for sending us your query. And that will be all, Shweta. Thank you so much for being on the show and explaining different aspects of investments and answering our viewers on their financial portfolio.